What's up, everybody? It's Ted here with Bodies and Wicks. It's been about a week since I did a video. Of course, I always do them at the beginning of the week to try to give like a weekly outlook, weekly forecast. Regarding smart money, this one's just going to be a short one. I'm going to try to do short videos on just specific um, ones instead of trying to do all three, like how I usually do Monero, Bitcoin, and Ethereum, the barometers I call them of crypto. I'm just going to do one on each. That way, hopefully, it'll be short enough to where it'll keep your attention and just long enough to where it's not going to bore you to death. All right. So this one's going to be about Monero. Hey, because Monero's been looking good. And again, this is about smart money. What is smart money about? Smart money is about the people that have the money to control and manipulate the charts and how to trade against them. There's a lot more to it than that, but if you go back and watch my videos, I tried to give a little bit of a lesson in each one, but I don't have like a syllabus style of how to be a smart money trader. I have been mentored in it, with kind of a syllabus style, but I'm not going to copy and trade my mentor. I'm just going to try to give you bits and pieces of what he's taught me by doing it live, with the current charts that we have. So if that's the kind of thing that you're into, again, it's smart money. It's all about taking what you've been taught and then turning it upside down, basically. So anything as a trend line or a bull flag or a bear flag or what they're called harmonics or Elliott wave or any kind of this traditional stuff that you've been taught, throw it out the window. And I mean throw it out the window because that is nothing, absolutely nothing what we believe in, right? It all has to do with price seeking out liquidity and price seeking out imbalances. Those are the two main things price likes to do, and so that's what we look for. And there's specific things, there's specific ways we look for those, right? And so a lot of what you see in my charts are going to be rectangles and lines. You won't see diagonal lines. I mean, I rarely have a diagonal line. If I have a diagonal line, it's because it's what's called a false or a phantom trend line, and that means that is what people are looking for. And they're looking for that, and they're thinking, oh, so that trend line is there, and so I might as well trade along that trend line, because it's going to make me money, eventually down the road or something like that. And then usually what happens is that in smart money is that it goes against that trend line. And Monero actually kind of has one. It has one, and I want to see if it's possibly going to go down and break it, and I think it will. But so yeah, if that's the kind of thing that you're into, if you're interested in breaking out of what you've been taught, breaking out of the fray, making sure that you're not being fed all this same mumbo jumbo that you've been being fed, then I suggest you go ahead and do something for me. Hit that awesome like button. I think that's the least you can do. Hopefully, if you do like this content, or if this is the kind of content that you're going to be, hopefully, preparing for in the future. The next thing you can do is share the video. And when I mean share it, I mean share it. Yeah, I mean actually just really share it. Just share it everywhere. That would be awesome for me. And then lastly, of course, just subscribe. Um, I'll be putting videos out like this. Probably, I usually try to do them Sundays, and then I usually try to follow up on Monday to see where it's going. To try to give you more of like a weekly breakdown, because generally things follow a weekly pattern, believe it or not. So, um, yeah, so that's pretty much the opening of this. So let's go ahead and get into the charts of Monero, right? So, yes, and I actually have a fancy little circle. I don't know if I hope this is showing up on the screen. Actually, I have a fancy little circle that's showing up on the screen now. So, um, we can go back and go back for see where the yellow markers are. They should be marking out weekly, but I think some of them are a little off. Um, but yeah, it I mean they're close enough to a week to where you kind of get the idea. Basically trying to show how one goes from down down from a week to up from a week, down from a week, up from a week. Because they're kind of showing off a pattern. Like in this one here, it goes all the way down, and then on this day, probably about early in, I don't even know what day that is, July 13th. I don't know if that was earlier in the week or later in the week. I'd have to bring up a calendar to find out. Let me see if I can find a calendar really quick before I get into this. That way I actually know what I'm talking about and not just giving you guys some BS. Geez, where is my calendar? That is not good. It's usually like right down here, and I can see like the number on it. But considering this is a Mac, oh there it is. Okay, I found it. There we go. So let me open up my calendar here really quick and see what day the 13th was. Okay, so the 13th was a Wednesday. Or no, wait, was that July or was that June? That was July. Yeah. So 13th was a Wednesday, so that would be about midweek, right? So that makes sense that the low would be midweek and then boom, comes back up and finishes out the week, above where it started. That usually happens on a daily basis too. On a daily basis, it'll start at one point and then what we call a Judas swing. That's what we call it. We call it a Judas swing. Basically, saying that the price drops, making you think it's going to continue dropping, and then it's called a Judas swing because it betrays you and goes the other way. So that's why we call it a Judas swing, and that usually happens on a daily basis, believe it or not, and also a weekly basis. And then, as you can see here, you can kind of see it happening again. It gets all the way up to the top, falls back down, has another Judas swing, and then boom, we hit the top here. And then it looks like it kind of consolidates for a little bit, and then you see another boom, Judas swing, and falls back down, and then boom, right back up. And of course, we go from one week to the other. We see the Judas swing early in the week, and then boom, just skyrockets from there. And now we're seeing the uh, top of this formation, and it's happening right basically at where a bearish order block would form. So that bearish order block would be right there where that green candle is. And I'm looking at this at a 4-hour chart. Generally, that's the way I look at things. Look at things at a 4-hour chart and a daily chart. And the reason I like a 4-hour chart better than a daily chart is because it kind of gives you a better idea as to what is happening versus the daily. Daily can give you some great information too. Don't get me wrong. This is the daily chart here. Let me turn this off auto so it's not freaking out all the time. Um, but the daily chart here, I got here is a huge fair value gap on the daily that I have marked all the way across. So here's my thing, especially with the fair value gap on a daily. It leaves this big fair value gap. Now, if you don't know what fair value gap is, it is the area between two candles, right? That do not where the wicks do not touch. So I actually don't think I have this one completely drawn out. No, I do not. Yeah, I do. I do. It's just looks a little different. Okay, so let me go ahead and delete that one. And it's actually this right here. So this is your daily. Yep. Well, it actually says weekly fair value gap too. So it must be a daily and a weekly. I don't know. Let me check the week. I don't know if I did that wrong. Is that a weekly fair value gap too? It is. Wow, okay. So not only is it a daily fair value gap, but it's a weekly fair value gap at the same time. Now, what I don't like about this is that since it is a weekly and a daily fair value gap is that generally it will, once it creates that gap, it has to fill that gap. And how it fills it is it will fill one side and then fill the other and then go back. So I have a feeling it's going to come back down and try to fill the rest of this gap, right? So, uh, so that's what I'm watching for on Monero. So right now, I had this 4-hour fair value gap, and there was what I call the false support happening just before I recorded this video. I thought it was going to go down. I really thought it was going to go down because of this false support. And what I mean by false support, you have one, two, three basically lines touching to where most traders would look at that and they would say, well, that's a support line, right? That's your support. It's not going to be able to go below that. You're crazy. It wouldn't go below that. That's where the support is. That's why it keeps touching it and bouncing off. False. That is what smart money wants you to think. Smart money wants you to think that, so that way when it goes back down there, you trade by buying off that support line, and hope that they're hoping that you trade with a crap ton of leverage, and you throw a lot in there, and that it'll keep going up. Instead, what I believe is going to happen is that it is going to come down, and it looks like it's doing it right now. It's going to come down, and yep, touched it. Touched the 4-hour fair value gap. Boom. Now it's probably going to bounce back up. And now what you have to watch for is this. You have to watch for what is the bearish order block. What is the bearish order block? Well, that is when the price starts to rise, right, before it drops again. And, well, we'll have to see if this closes, right? We're going to have to see if this closes, this 4-hour gap, and it just past 6 o'clock. So within within just a couple of minutes, this thing has fallen that far. Oops, I didn't mean to move that. At least I don't feel like it should have fallen that far, but I guess it did. It fell from 159 to 154 in just a few minutes. Let me look at the 15-minute and see if that's actually what happened. No, that is not what happened. Okay, so it'll be 7 o'clock, I guess, whenever we get the new day, maybe. Okay, I am on Central Time. Usually it's 6 o'clock is when we get the new day, right? So that would be. I wish this thing would unlock here. How do I get it to unlock? Oh, here it is. Unlock. Let me see where the new day is. Well, the new day for me is not there. See, 6 o'clock. This would be where the new day is. So this is actually the candle where the new day is. It would be 6 o'clock. So let me check the daily to see if that's what happened. Okay, so it looks like it dropped from there to there would be the daily. Let me zoom in a little bit closer to see. Let me actually grab this and move it. So it does have a big wick on it already for the day. So maybe it was earlier in the day that it did that big old wick, or unless the day hasn't ended yet. I am not 100% sure, to be honest. But usually 6 o'clock is the time that the day ends. So I guess I'm kind of confused right now on where this day ends. But if this closes below here, which I have a feeling it's going to, then whenever it rises back up, you're going to hit this bearish order block, right? It could be this one, or since there's a down candle right here, it could be this one too, right? You could see it rise back up, hit either one of those, I could actually copy that. I don't know where the copy went to, but oh, here we go. Let's clone. There we go. There we go. Could be either one of those that's going to come back up and reach to and then start falling again. And why do I think it's going to start falling again? You see the trend line here that I was talking about? I call that the phantom trend line. You got this point, you got this point. So now everybody's thinking, well, at least it's probably going to stay along this trend line. Well, guess what? Right here is what's called a bullish breaker. What is a bullish breaker? It's when you have, and if you've watched my videos, you've heard me talk about this before, you have a low, high, lower low scenario. Now, what does that mean? That means smart money has taken the chart to a point to where it was comfortable, and they said, okay, let's press up really, really hard, right? So let's put all our money in it to get people thinking that it's going to buy. And so they do that. And then all the retail people start buying with them. Well, then once it gets to a certain point, which is generally a bearish order block, which that's what it was. Let me pull out a trend line here. So bearish order block would be something like this right here. That'd be, again, your last bullish candle up before it your next big bearish candle closes below it. It didn't actually work, but right there, that is exactly what I'm talking about. And that probably happened on a daily basis. So if I go back to the daily, you'll probably see that bearish order block happening. Actually, no, and you can't. It's actually within the day. But let me see here. That looks more like. Okay, never mind. But let's go back to the 4-hour because different time charts can do different things. So you see how it has. This is probably the last push up before it. The last push up before you see this big drop right here on this candle. As you can see, it's always the 4-hour candle of that day, of the new week, to where it drops all of a sudden. It's all of a sudden the new week makes it drop. Because everybody's thinking, okay, I don't know what everybody's thinking, but this is what smart money's thinking. It's going up. Everybody's thinking it's going up. It right at the end of the week, it looks like it's gonna, continue breaking out, considering it made this huge spike, and then boom, it falls, and then it consolidates for a little bit, and then it goes low, and then they push up. Smart money does, and then once it gets to that certain point, that bearish order block, what do? They sell. They sell because everybody else is buying. All the retail people are buying. They sell, and then what do to hedge against their sell? They sell. They sell short, on the futures basically. So they can sell their assets, and they can sell their assets off of Monero that they own, but by gaining that back, they also go short on the futures. So, then they got the leverage with them. They that goes with them, and then all of a sudden they're making more money than by selling off all their assets and then taking that and hedging it by going short on the futures. So that's how they make more money, is by doing that. Right? So then now it jumps down to a comfortable point to where they want to start buying it back. Well, that comfortable point to where they want to start buying it back is going to be your bullish order block. Now, I put there, you see this line that says bearish order block. That line goes all the way across from the previous month, basically, back to June, right? So it comes up to that area, goes right through it, and, well, it gets close to it, pulls back, and then goes up through it, pulls back, goes up through it. So it's kind of dancing around this bearish order block is what it's doing. So now we have a bullish order block. that bullish order block is going to be this right here. And I'm going to change the colors of this so that way you can see it. Styles, green, and also let's make it really thick. There we go. So now that is your bullish order block, and I will also make this say plus OB so that way you know it is a bullish order block. Guess I could do capital. Oops, almost knocked over my soda. That would have been bad. Not my soda, my Rockstar. I got a little bit on my hand, but that's okay. All right. Anyway. All right. So plus OB. All right. So then it drops down into this, bullish order block, which is also a previous fair value gap as well. So not only has it not completed, well, I guess it did complete that fair value gap completely. So it runs up, fills the fair value gap, pulls back down, completes the fair value gap, and then it goes on. So now that this fair value gap is completely filled, um, it doesn't have to return to it. So whenever it does return to it, it bounces back off of it, right? So the next time it does return to the fair value gap, what does it do? It just bounces off the bullish order block. It has nothing to do with the fair value gap at all. So I could actually take this fair value gap, pull it back here, just to show you that basically this has nothing to do with the fair value gap at all. I'm going to start removing some of these. There we go. Some of these Fibonacci's, so we can take a look at what is happening with the Fibonacci's and why it did what it did. So if we go to where it was, filling up going sideways, filling up the fair value gap, use that bottom point right there as your low point for your Fibonacci. Why? Why would I use that low point? Because that is what was the previous low point. Then it came up and then broke structure. What do I mean by broke structure? I mean these highs right here, this high right here. I'm going to draw a horizontal line all the way across. That one right there. There's a horizontal line right all the way across on a 4-hour timeline that this line broke. So this price action comes up, it breaks that, right? Now all of a sudden we have a break of structure. Now that we have a break of structure, now things are in bullish territory. So now that things are in bullish territory, how far is it going to go up? It gets up all the way to, there is a 4-hour, here I put a 1-hour gap. What I could do is I could change that to a 4-hour gap, or just add a 4-hour gap, which is probably what I'll do. Boom, right there. There's the 4-hour gap going all the way across. So it goes up, reaches into the 4-hour gap, and then once it reaches into the 4-hour gap, it gets rejected. Where does it pull down to? It pulls it down into the smart money buy area. What is the smart money buy area? Anything below 62% or 61.8%, generally in between the 88.6%. Right? Anything anywhere in between there will be a smart money buy area. And that's why it doesn't stay there for very long and then pops out. Because right here is where smart money loads up after that pullback. It pulls back, it hits the 61.8%. Everybody was probably thinking that was the end of it. And that's people probably loaded up on that. And then they saw it come up here and they saw it drop again. So then right here is when everybody probably sold. I would say not smart money, but your typical retail trader sold. But I look at this and you see these lines I have here. I see equal highs. Whenever I see equal highs, that tells me that those equal highs are going to be broken because it has created false liquidity, right? Or manufactured liquidity, meaning that the next time it gets to this point right here, people are going to be selling short. So it sells short, comes back down into this, the Fibonacci zone, the Fibonacci smart money buying zone, right? They load up really, really quick, and boom, it rockets off like a spaceship, right? And takes off. And it goes back up past the highs that it previously created, right? So now that it has done that, and I'm going to get rid of these Fibonacci's here, we can probably put a new fib on this low going to the new high. So now that we have a new fib from the new low to the new high, we can look at where it's possibly going to go to next. And look where it's going to possibly go to. Anywhere, what I'm thinking is it's going to go to this breaker, this low, high, lower, low scenario, the area to where they pushed it up, right, and made people buy with it, and then they yanked the rug underneath them and then made it go short, screwing a lot of people out of a lot of money. And so then people probably saw it going short and they started selling short with it. Boom, it gets to that bullish order block, right, which is the last down candle before the next up candle closes above it in uh, anyway, I guess you could say in a consolidation or a sequence of waves, to where it's going to be measured within a Fibonacci. And like I said, the reason why the Fibonacci would be measured there is because that broke the structure previously. And then that's why we would measure this here to here, because this huge run broke this structure here previously, right? So, considering it broke that structure there previously, now we're watching it come back down. Here, we're seeing this 4-hour fair value gap that you had that false support that I talked about. Broken that, it's probably going to rise back up, probably somewhere into the middle of this 4-hour fair value gap. And look, if you look at this, look where the middle is. It's just right there, right in between those two red areas that I was talking about. So either one of those could be the what we call consequential encroachment. Consequential encroachment is going to be halfway through this fair value gap. So it could come up, hit anywhere in between these areas, and then all of a sudden drop. Hold on, it says my Mac is low on battery and it's going to go on sleep. I don't know how it got unplugged, but I'm going to try to plug it back in really quick. All right, found the problem. And as I found the problem, I accidentally unplugged the microphone. So all is well now. Okay, anyway. So now we're seeing this drop down here. Like I said, it could come back up here. And then, like I said, you got this phantom trend line, right? This red dotted line I have here. Let's see, it says trend line. I am going to style it a little bit different. Well, I guess you could keep it like that. I guess you just make it thicker. There we go. So that way you guys can see it. Text. I'm going to put phantom trend. Oops. Oh, come on. Oh, Jesus. One more time. Come on. You guys do that a lot, where you hit the caps lock all when it should be the other way around. I know Windows just started correcting that. I wish Mac would. All right, so here is the phantom trend line. So what could possibly happen, possibly, is, from my experience watching these things happen. Again, this is not financial advice. Is that it could, maybe fall a little bit shorter. You do have a bullish order block right here, right where this green line is right here, right? That is right where your last down candle is. I'm going to zoom in on it here because I'm sure everything looks pretty far away at this point. This candle right here, right? So, lagged frames detected 25% over the last 2 minutes. A few seconds, whatever. So, what you could see, right, is it come down, touch that area right there, right? I'm going to make another box. I know you guys are sick of my boxes, but this is how I do price action. Now I'm going to color this one different. Let's do this one, I don't know, purple. That way we know we're not doing anything similar. Okay. So it could come down, touch this, what we would typically call a bullish order block, right? Move back up into back into those red areas I was talking about, into what we would call a consequential encroachment, which would be right there, right? That would be the consequential encroachment. Let me turn that purple as well. Purple for consequential encroachment. You really can't even see it, can you? Let's go teal. There we go. How about teal? Teal for consequential encroachment. Okay. So it could pull back up into that area, right? And then bounce back down. And then while it's bouncing back down, it could come into contact with that trend line, the phantom trend line. Now, what is also at that area of the phantom trend line is the breaker, right? The breaker is also right there. Okay? So what I'm saying is that it could it could come down in here. Everybody starts betting on that it's going to pop out. They start buying at this trend line area. It does so, but guess what? It's already underneath a bearish order block now. So now it hits the bearish order block, drives short, goes into the breaker area, right? And it could get as low as 145, right? Or 146. So that's what I'm thinking is going to happen. And why would it do that? Well, because that is below, if you do the Fibonacci from here to here, it's below the 61.8% and just in between the 70.5%. Those are the smart money buy areas, right? This is a smart money buy area that I drew right here, if you don't remember. That was a smart money buy area. So just as it did whenever it dropped down into here, the smart money buy area, I have a feeling it's going to do the same thing. And I'll draw a little path, right? So it could come up here, down to here, back up to here, here, and then bounce up, and then back down. And then maybe stay in this area for a little bit before you finally start seeing it break up again. But once it does break up, it will break up and get past these highs. So just be careful. It is the beginning of the week, and that's what usually happens. This is what we call a weekly profile. Weekly profile meaning that it will probably drop below a certain point during the beginning of the week, or at a certain point, at the beginning of the week. Could be Tuesday, Wednesday, whenever it gets its low. It could be Thursday or Friday. This thing could be dropping all week, to be honest. And then at the end of the week is when we finally start seeing its run, right? So that's generally what happens with the weekly profile. And especially with it dropping as hard as it is now at the beginning of the week, I think it's probably going to be dropping for most of the week. That's what I think. And then probably around Thursday, Friday, we'll start seeing it shift gears, right? Because I think a lot of people are seeing how much of it is above this area right here that it hasn't got above before, and they're saying, oh, it's not going to get this low, and then it's slowly going to work its way down into here. And then once it does, then boom, it's going to take back off. And once it gets back down below these areas, people are going to be like, "Oh no, it's gotten below, this low here," which they probably think is support. It's probably going to create a false support area again, and then drop, just like this phantom trend line here, and then drop below it, and then everybody's going to get scared, and it's going to pop up and probably hit the back of the phantom trend line, right? And everybody's going to sell again, and it probably will sell off with it just for a short second and then take back off. All right. That's all I got for you guys today. That's what I think is going to happen with Monero. I'll be back with another video shortly, probably either about Ethereum or Bitcoin, one of the two. So thank you very much for watching, and I will see you all very, 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 very soon.